World Financial Group offers entrepreneurs from all backgrounds the opportunity to start their own business on a level playing field. Dr. Jana Woodhouse, receiving the WCM Wall Street Pioneer Award by the United Black Wall Street of America, Inc., is one of those entrepreneurs.
I see WFG and TFA as a place where African Americans with an entrepreneurial mindset can flourish. And the bonus, we help families and serve the communities across the country.
To learn more about us, go to worldfinancialgroup.com.
We are the sons and daughters of the soul. We are resilient and forever forward-thinking. We ask for nothing else than the opportunity to live and to create the lives that we were meant to live. We want nothing but an equal chance at options and possibilities. The same possibilities and options to live out our potential as our fellow man. We want to be heard, understood, and expressive in our reality. We are the future. We are the creative. We are here.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be lethal to your mind, to your soul. She never listened. She knew that their thinking was old. She was magic. She is the definition of spirit. She is what champions are made of. She is now.
Greetings and welcome to Access Wealth Nation with Dr. Jana B. Woodhouse. And I am so honored and happy to be here. Happy New Year, because this is my first show that I've been able to do. I've been truly challenged and under the weather. That flu, whatever it is out there, be careful. I wouldn't wish that on my worst enemy. But I'm up and running. And of course, today I wanted to speak about taxes, because the tax season opens up on Monday, the 29th. So as you know, we're broadcasting on the Soul City Broadcasting Network and also through WHCR 90.3 FM, the voice of Harlem. And I, Dr. Jana B. Woodhouse, I'm going to bring you some checkup from the neck up. I know I'm still kind of hoarse, but I'm so much better than I was. I got to just praise the Lord for that. So in that, I want to emphasize some things. You know, we have the How Money Works, Stop Being a Sucker book. And this book you can get free if you send an email to Anaj Enterprises Inc. at gmail.com. Anaj, A-N-A-J, Enterprises, E-N-T-E-R-P-R-I-S-E-S-I-N-C at Gmail. Of course, we're going to be opening up in the month of February the Ask Dr. Jana at soulcity.me channels, because we have the opportunity to answer your questions. We've had a little bit of difficulty, plus the fact that I was not here, but got the opportunity to share your desires and your dreams, and that's what's so important. You know, we've got to get that checkup from the neck up. If we know how money works, then we have the opportunity to make a difference. And if we know better, we're going to do better. So to just add to the opportunities of our knowledge, Of course, you know, I've been in the tax business for 46 years, and my opportunities are to bring the knowledge on how taxes work as well as how money works. Now, once you get your checkup and you listen in and you'd like a free financial analysis, all you got to do is give us a call at Anaj Enterprises at 646-375-2121 and say you'd like to have a free, no obligation financial analysis. It's just a checkup to see where you are and where you'd like to be. Some of you have taken advantage of it, and it's been wonderful to get an opportunity to meet some of you. But also, I love the element of Zoom so that, you know, it doesn't stop us from communicating. It's so important. Of course, you can see Access Wealth Nation on all the Soul City networks. From Amazon Prime, Fire, Roku, Apple TV. We're all over. My job is to get this information across the country. And of course, every Thursday at 6 p.m., you can come and join me for a live session. Of course, a lot of you come on after. I get your comments after, and I appreciate you definitely. And I appreciate all the prayers and the love that was sent while we had our little challenge. If you have any questions, please feel free to ask them. You can place them in the chat. Again, you can always send me an email. But above all, we love to hear from you on all levels. And if you'd like the book, all you got to do is send that email at Anaj Enterprises Inc., and we will send you a book back. And then the only obligation you have is to read the book. That's the most important part. Read it and let us know. I love the fact that some of you have sent pictures. I'm going to put together a collage of all the pictures, people exercising, running, walking. I was like, how are you walking and reading a book? But anyway, glad to have y'all, you know. So today, since the tax season officially opened, which I thought was so weird, IRS closed to all processing on November the 18th. And so they're opening back up on January the 29th for e-filing to be able to get the returns out. So you can have stuff, you can go to your preparer, your accountant, your advisor, and get the returns put in place so that on Monday, the button can be pushed and you're processing. So I'm going to cover a few things today so that you know what you should be looking for and what really your preparers should be asking you. So if we take a little look and see, of course, the biggest issue right now is your date lines. You should pay attention to your date lines. I'm not seeing the slide. Okay, so here we go. To make sure you put on your calendar the due dates. Please do not wait until the day of to start to put your stuff together or send your stuff to your accountant. You're almost definitely asking for an extension. And I'm going to cover that tonight too. We'll cover as much as we can, and then I'll do a second session if necessary. So make sure you check all your due dates for your returns. Projected due dates are based on your forms. So if you have a partnership, that's a 1065, or a 1120S, which is a subchapter S form, which you need to have the K1 sent out. That's by March 15th. So do not wait till March 15th to get those forms, the returns done. You want to start now. If you're in business for yourself as a partnership or a subchapter S, that means you should have closed your books as of December 31st of 2023. So you should be able to pull together your information and get it to your accountants for at least February the 15th. But the due date is March the 15th for your 1120s, which is your corporate taxes, those of you who decided to open up a corporation. That's a C Corp. Or a 1040, which is your individual return. Or your 1041. I know a lot of y'all may not know what that is. A 1041 happens to be for your trust, and also the 709s. So, and then some states have different due dates. New York follows the federal government, but there are other states that follow their own due dates. And of course, you have states that have no state tax, like those, like Texas and Florida and Wyoming, Tennessee, um, to name just a few. But I just say to you, make sure that you get your returns in as fast as possible. I love my clients. They are really in that mode. And so they've already started. I'm a little bit behind, but there are certain rules and regs for this year to protect the preparer, to know that the preparer has talked to you and asked you some questions and done some follow through. Now, if you have an extension, if you see there is no way I'm going to make it through these dates, you might have had a little situation where you're ill and you can't get to it. An extension is based on the 6 months from the original filing date. So 6 months from March 15th, that's March, April, May, June, July, August, September. You have to, by September 15th, file those returns. That does not give you an extension of payment. Please understand that does not extend you against payment. It only extends you against the penalty for late filing. Same thing for April. It's in October the 15th. And so you can have an extension, and sometimes we need that. But do not wait till the last minute to get your extension. You know good and well if you're going to get your paperwork together by that time, or if something has happened and you can't. Okay. So these are some common questions. Should I file an extension? If you don't have your stuff together, you do not want to have a penalty for a late filing. That's the only thing the extension helps you with, is the penalty, which can be extensive, against filing. So if your bookkeeping's not up to date, or you are still researching some deductions that you did and can't find the receipts, if you're trying to figure out where you have sufficient money to even make a retirement contribution, you might want to do an extension. Okay. Here's a question that came up is, can distributions be taken before age 59 and a half to pay higher education or to avoid 10% early withdrawal? If you take money before out of your retirement, that's your 401k, your IRAs. Then after you realize, and your TDAs also out there for the government workers. And if you want to avoid paying that 10% penalty, which yes, everybody wants to avoid that 10% penalty. It's terrible to save, $10,000 and $1,000 of it is going to the government, and they weren't in the deal. They weren't in the mix. So therefore you want to avoid that. Can you do that? Especially if you're using it for higher education. There's a few exclusions. One is for a house, the first home buyer, and another one is for higher education. So yes, you can take it out before 59 and a half. And as long as you're paying it for the education for yourself, your spouse, children, foster children, adopted children, grandchildren, individuals that are living with you, that are related to you in some, you can usually get around even maybe a cousin. The purpose of the 10% additional tax, these expenses are to prevent the 10% additional penalty, which is, they say, tax. These expenses include tuition, your fees, like lab fees, books, supplies, equipment. Um, those are required for enrollment and attending an eligible educational institution. So you can do that. Now, which was interesting, which I found out last year, was that if a student is at least a half-time student, room and boards are also can qualify for educational expenses. Good thing to know. So here's an issue that comes up periodically. I owe more than I want to pay. Do I have any options? And the truth is, the answer is yes. They may not be the ones you like, but one is that you could do an installment payment. But let me inform you about the installment payments. The installment payments still accrue interest at about 3%. So you may not want to do that, but it's better to do that than to get the penalty for not paying, because that can build up. Okay, the other thing is your offering compromise. I know all over the radio these advertisements about um, doing an offering compromise. Right now, the government has a tax freedom act that has gone through that you can at least see if you qualify, that may be able to help to reduce or eliminate back taxes owed. The worst thing you can do, the worst, is to stay quiet and think it's going to go away. Not going away, building up, growing to be large sums. So it's better to go ahead and address it. It's just like an illness. When you see that you're not feeling well or your body is reacting in certain ways, it is better that you go and check it out and find out what it is and deal with it. Go ahead and deal with it instead of waiting, and then it'll be too much to solve. So the same thing is with your taxes. They don't go away. As a matter of fact, Uncle Sam will probably wait and lay in the crack a bit at 3, sometimes 7 years. And then, poosh, I owe. And I don't even know what I owe for. And that's another thing is that those letters that come in the mail are not to be pushed to the side or thrown away. You need to open them up or at least save them so that your accountants or tax specialists can find out what in the world happened, what was going on. Now, of course, there's other places to find that information, but it'd be a lot easier if you had it. The other thing is people think, well, I'm going to get this large refund. Not if you have an installment payment. If you owe the government, think about it. If somebody owes you and then you get a windfall, don't they want to get paid? Shouldn't they get paid? So that's the way. Now, if you don't think that they should get paid, then that's another story, and that's another mode that you have to deal with. What you have to do then is to go to a tax advocate or have an ombudsman to represent you or an accountant to see, maybe I just don't owe this money and they just disregarded all of my deductions and I didn't know it. Okay? So those are things that you can do. Now, if you have an extension or if you are during this period of time and you are eligible to do two things, you can make a contribution to, if you don't have a retirement plan at work, you can make a contribution for 2023 and 2024. You can put money away. I know some of y'all are saying, I don't have this money to put away. Well, that's when you need to sit with a financial advisor and figure out what's going on with your money, because it is better in your hands later than Uncle Sam's, because Uncle Sam don't give back. You don't give that money back. So maybe you can put up a contribution of $6,500. That's in a traditional or a Roth IRA. And we'll do a session on the different retirement plans. But If you are age 50 or older, you can add that extra $1,000 in there. And it, again, sometimes it's deductible, sometimes it's not. But you need to go to an accountant or a preparer to find out, if I make this contribution, will it be deductible for me? Because sometimes it's not, especially with the tax laws the way they are. And if you make a certain amount of money, they're deductible, and sometimes they're not deductible. Okay. But if you own your own business, there's a chance that you may be eligible for things like a SEP, a self-employment plan, which can reduce your funds 25% of your retirement money. I mean, your profit. Oh, retirement money. Profit to put into your retirement up to I think it's a $56,000. So that's something good. You can put money away, make money. You know, I tell folks, never put yourself in a position where you think that you're just doing losses. I guess I can throw this out there now too. The government is not playing with y'all right now. They know that you've been using your Schedule C's, which is your self-employment, and you've been claiming losses. Please be careful. And I'm hoping that the accountants and preparers out here are warning people. They are definitely looking to see if you are really in business, or is this a hobby? And if it's a hobby, they count the money, the income you made, but they will not allow you to claim the deductions. So don't put yourself in that position. You have 3 to 5 years to make a profit and to show that you're in a profitable business. And with things going on today, yeah, you should be able to make a profit. So in respects to it, make sure that you're talking to a professional. Now, if you're going to what I call the factory, you know, those places that take your information, file it, don't ask you any questions. You might, if you're in business for yourself, you may not want to use that kind of vehicle. You want someone who's going to interview you, find out what you're doing with your business, and take an interest. Again, that costs money. All right. So just as a side note, next is, how much can be gifted to someone without triggering the gift tax? Did y'all know it was a gift tax out there? It is. As a matter of fact, it was interesting. IRS had the nerve to send agents to Aretha Franklin's relatives to really ask those questions. Did your Aunt Reby give you money for school? Did your Aunt Reby give you money for a house? How much was it? Why? Because the gift tax exclusion for 2023, just last year, was $17,000, up 1,000 from 2022. Yes, you can give, but be careful. And the person who pays the gift tax, in this case, it would be Aunt Rebe's estate. It would be who gave the money. So even if you did get gifts or was gifted, make sure the person that gifted is filing a gift tax return. That's where the professionals come in again. Okay. So, who can claim home office deduction? Lord knows this is a big issue right now. Um, Home office, and especially because of COVID, so many people have, I work at home. Okay. There's some rules to this working at home deduction. First and foremost, is it where you do your primary business? It says the portion of home used solely for business use and nothing else. So, for example, it can't be the kids' playroom or the nursery and your office. All right. Only for self-employed individuals, W-2 uh, employees are not eligible for a home office deduction. Okay. Remote workers, that might be a case, but you really have to show that this is where, because W-2s doesn't help you much, you know, with the tax act back during the Trump era started, is that most working, if you're working as an employee expenses were not deductible. Now, here in New York, they are deductible as far, but that's a separate return. But things like your union dues, your uniforms, and uniform means that it identifies the company. It's not that you wear a suit to work. That's nice, but it can be used on any time. So it has to be specifically for work. And if you're in business for yourself, same situation. It should, I just noticed a few banks now, they're using the shirts, the business shirts, and the vest with the company logo on it, things like that. Okay, so those are the home office expenses. It's two things that can be done. One is called actual expense, and the other is simplified mode. Simplified mode makes it a lot easier. It's and I'll tell you why. Actual expense method only deduct a percentage of the the home. So for example, if you have a home space of 3,000 square feet and the office is 300 square feet, then 10% of the home's actual utilities and other common housing expenses are deductible. Now, of course, this has to be proven. Need receipts. Need to be able to show these true expenses. Well, the simplified method is a little easier and not auditable as long as you can show that the home is the home office, that there's a home office, which is $5 per foot up to 300 square feet. So if you have a 200 square foot office, a 100 foot square office, then you get $5 and that's it. Okay, so these are options that you go through. Now, these are some of the questions that should be asked by your preparer. And if they're not asking it, you might want to take a trip to another preparer. Okay, some simple things. What I do is I have my clients fill out most of the time. Sometimes they go kicking and screaming, but they fill out the tax organizers so that I know whether things have changed from year to year. A lot of stuff happens in a year, especially 2023 was a rough kind of year for folks. So what you have to do is ask, they should be asked, did your filing status change during the year? Well, status is based on the last day of the tax year. So December the 31st, if you just, I don't know why people do it, but December the 31st, they go and get married. Okay. Or they wind up getting a divorce. Okay. Single or legally separated from their spouse under a divorce or a separation decree. State law governs whether taxpayers are married or legally separated under divorce or separation decree, and also married even if the spouse died during the year. They could pass away on December the 31st, you married. Okay. Or you could be considered the surviving spouse. Um, and so these are the things that you need to talk. The preparer has to ask this. Do you have a separate decree, a separation decree, an instrument, anything? Are you not living in the same household by the end of the year? There's another question is that have you not lived in the same household for the last 6 months? That could qualify you for head of household. Let me talk about head of household because this is another little nudge for me. Head of household does not mean that you are the person who pays the bill. That is not the definition IRS gives as far as head of household. Head of household means that you are taking care of the household. You are taking care of the household for what we call a qualified dependent or a minor child or disabled. child or parent, it can be a parent also, but that you were taking care of more than 51% of their living expenses. See, this is when budgets come into play. Why, sitting with a financial educator is so important, because that's where your budget. Where do I provide more than 50% of my dependent's livelihood? So, other things that need to be asked, which happens because we do everything electronically. A lot of times we forget to say that we've moved, and from the primary address that there was a change. Why is that so important? Well, it's okay when you're getting your refund electronically. It's all right when you filed your tax returns and they're electronic. IRS needs to get a hold of you, they're going to mail. They're going to mail the tax papers, and you won't know about it unless you set up on irs.gov your account. Now, I know most of us won't do this, but if you set it up and then you go in and periodically check to see if any correspondence has been sent to you. But the best thing is also to make sure that if you've changed your address, to let them know. Don't think they're not going to find you. Okay. Other things is, did you receive what's called the identity protection pin? This comes from IRS, and it basically is an identity for victims of identity theft. And not just, well, it's considered identity theft, but if someone has claimed your dependent unlawfully and they treat it as if they've claimed it and they're not supposed to. They did not take care of 51% of that dependent's livelihood. So, if that's the case, by now you should have received the IP PIN. So it's a PIN, and if a person receives that, the tax return cannot be filed without that PIN. So it's important once you get it, don't do that thing of throwing the letter over. I put it somewhere. No, it's as important as your W-2 form and your 1099s, your bank statements. These are very important to have, because if not, the return will not be e-filed. And if you don't have that number, they may have to manually file. And if so, that can take up to 16 to 15 weeks to process and to get a refund. Don't do that to yourself. Okay. The other thing is that, can you be claimed as a dependent by somebody else? Now that can be happening where, children go away to college, come back with other people. Can those people claim, or can someone else claim that the people? We don't know. So it's important to tell the story. And if no one's asking you, like I said, get up, because they need to talk to you. And they don't have to physically get up. There's things called Zoom. There's telephone calls. Things communicating. Okay. Did you change your bank account that you used for direct deposit last year? A lot of times people forget that they may have had a situation where they had to close the account. And so if that's the case, then what's the new account? Because if not, it can be total hell trying to get your refund. Of course, IRS, if it doesn't match on your tax returns, the account is not opened, IRS will send you, and so will the state. They will send you a check. So you know how it is to deal with the check. Takes a while. So make sure you prevent that from happening. Do you have previous years of tax returns that have either been unfiled or filed with unpaid due balances? Did you get any correspondence from the IRS? These are the things that need to be addressed, and really your preparer needs to know. It's almost like your lawyer. You need to tell the truth and then let them make the decision of what's the best route to handle. Also, did you reside in or operate a business in a federally declared disaster area. We have had many of them dealing with, especially right now in San Diego, they're just cars floating in the street. I say my prayer for my friend Lenka because it is really a difficult situation. But there are hurricanes, tropical storms, floods, also wildfires. Now, it has to be a place that's federally declared as a disaster zone. When we hear that, if it's not in our area, we don't listen, but you need to know for sure if that's the situation. Now, dependent information. Were there any changes with the dependents from the prior year? Now, I know there are some parents that are out there that they co-parent. So one year it's one child, one year it's the next, they switch children and claiming. That's fine, but just make sure that you've told your accountant or your preparer that this is the case, because it determines things like here, dependent credits and educational credits and earned income credit. And all of these things, you have to have children under the age of 19 or a full-time student who's 24, up to 24. But there are credits that can be given. But if you don't tell it, we don't read, minds. Do you have dependents who must file a return? That makes a big deal. Children work for the summer, they get their little W-2 form, and they're apt because they're going to get their refund. But they didn't pay 51% of their livelihood. You did. So if they didn't and they go and they claim themselves, they may get a benefit or get earned income credit, but that just messed up the parents. So you need to sit down with your children because they will go and they'll do one of those robo types of returns. And what happens is that then that has to be amended. Did you provide over half of the support for another person other than a dependent child during the year? Because that could cause you to claim them as a dependent. And did you pay child care while you worked or you looked for a job or while you were a full-time student? There are deductions or credits, child care credits. So you want to be able to get the maximum of your credits. We give Uncle Sam a considerable amount of money when we work, especially when we don't earn a lot of money. And we give, of course, you can't count Social Security and Medicare because those are you're going to pay no matter what, but the taxes. So if that's the case, you would like to get all of your credits as much as possible, and you can. And then, is there another person who lived with you more than half the year, but not claimed by you last year? Might be an opportunity there, for a deduction. We don't know until it's just like when you go to the doctor and the doctor asks you questions. If you don't tell the full truth, doctor can't help you. Same thing happens during this time during taxes. We're so anxious, and I'll say it's mostly in our neighborhoods, in the urban communities, that all these commercials about not rapid, it's not called rapid refund, it's called a refund anticipation loan. It's a loan. You're borrowing on money. Let me just, before I go to the next slide, what is a refund? A refund is I gave the government too much money. I gave something too much money and I want to get it back. Okay. You get this back with no interest. They've held your money for 12 months, but you're fighting to get it back. And you will pay extra money, a loan and interest, to go get it. So that's more money lost out your check. And then you're going to complain that you don't have enough money. Well, if you strategized properly, even if it took a year for you to get the money, at least you're getting all your money. If you pay a preparer, in some cases, especially the state, that's deductible. So why would you do that? Because someone has planted in your brain with a commercial to say, come get your money, we get it to you fast. Please be careful with that. Some things that you need to find out, that you need to tell. Did you start a business or purchase a rental property during the year? Why is starting a business? Because it seems like everybody that can fog a mirror all of a sudden opened up an LLC and not understood all the things behind it. And the first thing out their mouth is, but I didn't do any business. Government doesn't care that. You let them know you were in business. Why did you open up an LLC? Why didn't you open up a sole proprietorship? Why didn't you talk to a financial advisor and accountant before you opened up all of these entities? Why? Because somebody, I said I was going to get these t-shirts that says I'm in search of somebody. Because I would, on the back is, I'd like to kick somebody's butt. Because there's somebody out there has a tendency of telling people to do things that they haven't even done themselves. Okay, did you sell, exchange, or purchase any asset that was used for your trade or business? Do you need to file a Schedule C? If you have a sole member, one member LLC, you are going to file a Schedule C. If you have more than one person in the LLC, then that's partnership papers. And that's what we just talked about when we opened. Need to be done before March the 15th, because the Schedule K form has to be filed for it. So you got to do these things. You have a responsibility. And can it help? Sometimes, if with your return, it may show a loss and you can take it from your personal income. But all of this needs to be discussed. And if you're going to go this far, you need to sit and understand you get what you pay for. If it's a AI asking you a question, they may not ask all the questions. Yeah, artificial intelligence. If it's a person, they need to make sure that they know everything, and they're going to ask you these questions. And if they give you a form, fill it out to the best of your ability. Did you acquire a new or additional interest in a partnership or an S corp? Do you have a Schedule E for a K1? These are things that you're going into. You need to know what you're getting yourself into. I've had folks who have opened up multiple businesses and they said, but I didn't make any money on it. It doesn't matter. Did you acquire or dispose any stock during the year? A lot of people, this is including. A lot of people think that it doesn't include if I didn't make a profit. Wrong. Okay. It means that, did you have any transaction? And all of you virtual cryptocurrency people, hello, get on board, because you really need to be able to prove, what did you pay for the currency? What did you sell it for? Was it a loss? When did you buy it? All those things are necessary. Now, some of the apps help, but if you don't look and you don't do it, it's not going to help. Okay. Also, did you sell an existing business, a rental property, or other property this year? All important, needs to be reported on your tax returns. These are more returns. And what does that mean? That means another schedule and form. You can wind up with a very thick tax return. Okay. Now, the other thing is did you take out a home equity loan this year? If the home equity loan is not used for the improvement of the property, the interest may not be deductible. So you have to tell, did you refinance a principal resident? I know last year most people did not. And the reason being is because interest rates have been going up, but now look what's happening. They're beginning to come down. And as they come down, that's an opportunity to refi. The key is that if you're refinancing and going to take out to pay out off credit cards, school loans, medical bills, mm, 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 the deduction is not allowable. So do not do that. Now, there's some other ways of doing things which you can discuss with your accountant or financial planner, because that it could be deductible, but it's under certain circumstances. Okay. Did you lend money with the understanding of repayment, and this year it became totally non collectible? Yes, there is a way that you have taken, just like you could have gotten an income, a growth by charging interest, you'd have to pay taxes on that interest. You can null and void a non collectible loan. But you need to have, which I love Judge, what's the name, Judge Judy for this. Did you put it in writing? Did you get it in writing? Did you have the transaction put? It's considered a contract. Okay. Did you have any debt canceled or forgiven this year, such as a home mortgage, a student loan, a credit card? Those are 1099 Cs. And if that should have had happened, you're supposed to pay taxes on the canceled debt. Why? Because the people who the debt was canceled with is getting ready to deduct it as a loss. The other part to that, though, is that there are ways that you can file forms if you are insolvent or can't. Because if you couldn't pay it, it's probably because you didn't have the money. So let your preparer know this, so to see if you have the opportunity to cancel that debt and not have to pay it as an uncollectible. Did you purchase a qualified plug-in electric car? I'm learning about these electrical cars. Had a situation where mine, it was since I was out sick for almost a month, and I didn't start the car. The car was dead, and we couldn't figure out what was going on. We did get a charge, and then we were able to get it going. But now my goal is, when I have, what did you say? Good evening. Oh, that's Tyrone Glover, my credit specialist. He definitely Tuesdays at 6 p.m. Tune in, because he got lots of information about credit and this world. But with these plug-in electrical cars, there's a few things. If you purchase, there are some credits, but also you might have some situations with it. So, but did you do it this year, 2020, 2023? And did you make electrical efficiency improvements to your main home? I know that these people are going around in our neighborhood and telling us about solar panels, and get your doors done and get your windows done. Yet make sure that you talk to your accountant before you do it and after. Also, what kind of paperwork do you need? I still haven't figured out for one of my clients, got the solar panels, got the credit, saved himself from filing, having to pay a lot in taxes. And then the solar companies came back and said they want the credit. They want the amount that the credit was. And so just be careful when you're signing up for these types of entities. Income. Please remember where the people leave their job. And when you leave, like in the beginning of the year, and you get another job, you so happy to get that other job, you done forgot about that first job, and you didn't get the W-2 form for it. If we don't show all the income on your return, IRS, I hate to say it, sort of figures that you're trying to hide something. Now you're not, you just forgot. But these are some of the things that could cause it. Unemployment benefits. Guess what? They're taxable. Disability, SSI. You could have SSA, which is the Social Security um, Social Security benefit. But the thing is that you got to know, because the ruling is, and it's a little complex schedule that you have to fill out. It's simple though. You take 50% of the Social Security, add it to all the rest of your income. If it's over $25,000, there's a good chance part of your Social Security is going to be taxable. Not only that, but it can be up to 85% of that Social Security could be taxable. And if you don't report it, it is assumed that you did not give full reportable income, and therefore there's a penalty for it. And it's a hefty one. Okay. Where life insurance policies matured. And many of people, we know that life insurance is usually tax free or tax advantage, but in some cases, you have to roll it over. You might have to roll it into something that you don't have to pay the taxes on. You may want to take a long term care policy to roll it if the life insurance policy matured. Did you surrender any policies? Why is that necessary? Because if you are not beyond the surrender period, or that you surrendered it and part of the income was taxable, we need to know, because sometimes the insurance company will send you a statement and you don't open it. I know that. And so we've got to pack everything up if you have to and bring it to your accountant. But it's better when you open it up, because it costs you less money if you open it up and help to make the decision, as opposed to the accountant or the financial advisor or your preparer, because they're going to charge you. Okay, so take a look. Be involved in your finances, because they are that's what Oprah said. You sign your check. If Oprah can sign her checks, you can sign yours. Okay. Did you receive any income considered to be non-employee compensations? Now, see, they got things now. 1099 NEC, 1099 miscellaneous. This year we got 1099 Ks. What the Ks are for is for monies that you receive through Zelle, Cash App, PayPal. What is this? What's the difference between a financial advisor, a tax preparer, and an accountant? Is one better than the other? Okay. Financial advisor usually doesn't give tax advice, but they can skew or put your um, finances in order so that they work hand in hand with the accountant or the tax preparer. The tax preparer does just what it says. They prepare the taxes. You bring the information, they put it together, and they look at it and put it on the schedules and file the returns. An accountant, an accountant gives advice. They do consultations. Each one has a fee in there somewhere, but the accountant can be the tax preparer. They prepare the return. The accountant will look and not only look at your return from this year, but previous years and going forward and guiding you. You're not taking out enough taxes out your job, or maybe you should put more money into your retirement plan. You know, these are the things that the accountant will do, and the financial advisor will also look. So they have interchangeable roles. It's just that my clients are very benefited because I happen to be all three. Okay, so that sometimes you want to look so you can kill two birds or three birds with one stone, but everything comes with a price. And, I don't want to sound like, oh, we just do everything, haphazardly. These are expertise things, because as you go through life, you buying a home, you have children, you got to know what the laws are. We're getting ready in 2025 to have a whole plethora of new tax laws, or the old ones released or they kept. We don't know. Okay, so I hope that answered that question. Thank you. That was a good question. Do you expect a large fluctuation in income, deductions, or withholding next year? So again, this is all in pulling out all your stuff and looking at it and sitting down and getting a professional to work with you. Did you have a change in employment, a retirement during the year? I had a situation where I had a client that retired, but forgot that they had worked during the year also. And so we had income that was not reported, not a good situation. So this is sort of halfway through, and I'll be on the next show, be able to tell you more information to prepare for your tax returns. Again, that will be on Thursday at 6 p.m. And I hope this was useful to you. I hope you learned something, because this is not only learning, but to act upon it. If you have questions, you can send them to Anaj Enterprises Inc. at gmail.com. Be glad to be able to answer them for you or to give you some type of guidance. And so, it's so important that you act and you pay attention to your finances. How much money am I really making? Where is it going? How much am I paying in taxes? Can I pay less? These are things that are so important, but they don't mean a hill of beans if you know about it and then you don't do anything with it. When you're receiving, one more thing for income, when you're receiving income from unemployment and you say, okay, I told them to withhold, red flag, withhold what? How much? Withhold taxes. Okay, how much? They usually will, if you put it in their hands and say, I want to withhold, they will withhold 10%. But you may be in the 22% tax bracket. So what's going to happen? I could give you a couple of guesses, but the bottom line is you're not going to have paid enough in taxes and you're going to wind up owing. And then here comes those other questions that came. I don't have enough money to pay now. Do I need to do an offer in compromise? Do I need to make a payment plan? What do I do? All of that comes into play. Even worse is if you think it's going to go away. And what happens is IRS comes knocking at your job and they do things called garnishing. They take their money. And it's not just IRS. New York City and New York State are vicious. They will come but if you talk to them, they won't come get you. You need to talk and let them know what's going on. If you're a senior and you took out money from your retirement plan or you use taxable income and you really are in a situation where you have a fixed income, you really need to talk to a professional, and someone doing what we call a power of attorney so they can talk for you. But as a senior, they are not. The law is that we cannot put you in harm's way. We cannot make it difficult for you to live. So we have to be able to show, because sometimes your tax bill will be considered or dubbed uncollectible. I had that happen. And it wasn't the income taxes, it was the real estate tax. There's so many things the reason that IRS has and New York State has, but if you don't talk to them because you're scared or you think they're going to put you in jail, let me tell you something there. While I have these few little minutes, they don't put people in jail on a norm. They put people in jail. Number one, they usually put some famous folks, so it's scared the bejesus out of you. Okay. The other thing that they do is that they will come and garnish you. They want you to work. Because if they put you in jail, how are they going to get paid? Don't be frightened of the IRS. They can work. And matter of fact, they've been charged to be more friendly. And they have been. They have been more friendly with us. So, the key is that get your documents together. Oh, that's another thing people, and I probably talk about this later in another show, but the thing is that you need to keep your records. The minimum time that you keep your records is 3 years. Okay. That's the minimum. The maximum, if you own a business, you need to hold them for 7. Why? Because IRS can give you an audit if they see where there's discrepancies. So the more documentation you have, the better. So I'm hoping that tonight that you learn something, that you get yourself prepared. Monday starts the e-filing. They will be in February. This is the month of February coming up. So earned income credit, child tax credits may pay out slower. If you noticed last year and the year before, they paid out after they paid in March, because there's so many folks who go and file and they're not really eligible, or okay, this is the baby daddy, baby mama syndrome, where they file for a child that's not their dependent and they jump the gun. So put it in a sense, number one, in those cases, you should, if you're the victim or your child's the victim, file an identity theft report so the number comes. Because once you got that number, if they don't get the number, they can't file it. Okay. But the other thing is that there's so many bad stories out here of people taking children and filing early. So be careful. Monday starts the e-filing, and good luck. And if you need any assistance, we have Anaj Enterprises. We have individuals who are certified to be able to assist you. So it's been great. I'm glad to be back. You have been listening to Access Wealth Nation on the Soul City Network. And of course, we're broadcast through WHCR 90.3 FM. So y'all have a peaceful week, a safe week, and let's do things that will keep us knowledgeable about how money works.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be lethal to your mind, to your soul. She never listened. She knew that their thinking was old. She was magic. She is the definition of spirit. She is what champions are made of. She is magic.